Hey everyone, this is Rob Roy, and welcome to the Elliott Elite U.S. Market Update. Boy, some fireworks to finish the week, as I'm sure everybody is aware of by now, with the S&P 500 finishing down, or the SPX, nearly 60 points, the S&P Cash Index. So let's take a look at our Elliott indicator, and we had talked about how we had this wave 3 strong move to the upside, and we also had this vertical nature of the move. We'll get to the volume in a minute, because last week we discussed how that increased volume was also showing that some of the smart money was beginning to leave the market, and boy, we have been absolutely spot on. And I wanted to make a couple of comments, especially regarding the power of Elliott Wave and Profit Source and Integrated Investor. Wonder how many people's accounts finished to the upside last week, especially on Friday. Well, our subscribers here in the U.S. Did just that. Their accounts were actually higher to finish the week and had a very good day on Friday. And what are our main uses for indicators? Technical analysis using these tools: Elliott Wave, Profit Source, and Integrated Investor. So if you're not utilizing these, I'm not sure what you're waiting for, because you are missing out on incredible profit opportunities, and that's what we've been detailing for you. And if you've been watching these updates, you know that basically the market has been responding. It's not because of what we're telling you. All I'm doing is reading what the charts show and expanding on the analysis that's done. It's the indicators that are doing the work. It's just a matter of having the education in order to utilize those indicators and put them to work for you. This is how you make money, and when the volatility rises in the world of trading options, that's when you make significant money, and you can't miss these opportunities. It's a lot easier to make money with big volatility than it is in little volatility. A small volatility. So here's that big move down, as we talked about, and we'll condense the chart and see if this is indeed the start of the wave 4 correction, which it may be. There's a potential wave 4 target down there, and we talked about this last week as well, that when the 4 is listed here, it does not forecast that a 4 is ready to begin. It forecasts that if the 4 starts, that is a potential target to look for. But there's a lot of Fibonacci levels that can be reached for either short-term or long-term resistance support levels on the way down. There's lots of things to talk about when a wave 3 corrects into a wave 4. So big move to the downside. We'll see how that plays out. Note that we do have a little bit of support right here in this area of 2680, just where the market went sideways for quite a while before it made this vertical move. And I've mentioned this in seminars so many times over the years that historically, when something goes straight up, quite often it comes straight back down. And that means that it basically retraces a good part of the vertical move, and we may very well indeed see that. So let's take a look at the SPY so we can bring volume into the mix and look at this volume that we had on Friday. So there was some significant volume on the selling, but remember, we talked about this before last week, that or in our report last week, that on this move to the downside here and on the prior upward move here, because all this occurred last week, so on the prior upward move we had some significantly higher volume. And when you have that occurring, that tells you that some of the smart money is beginning to leave, which sets you up for the potential downward move or a corrective move. And again, this is just a corrective move in an overall longer uptrend. We're not calling for the end of the world here or a significant bear market. That could play out, but it's likely not going to with the economic issues, etc. This is just a long overdue correction, and we have been giving you week in and week out all of the criteria that we're adding up to show you that this was possible. So again, if you've been listening to the recordings, you know that too many things were starting to pile up, that it was time for this type of a corrective move. And look at the VIX. I left the triangle on here that we talked about in last week's recording. You can see that we had the triangle, but we talked about there had been enough elevation in the VIX that we could possibly break to the downside, but we didn't. We broke to the upside. And a triangle doesn't tell you which direction we're going to go. It just tells you that a breakout move is coming. And remember, a triangle is one of those Elliott Wave corrective patterns. We've highlighted them numerous times, and they are zigzags, flats, and triangles, and you're missing out if you don't apply those into your Elliott wave trading. They're far too accurate, and Elliott himself said their percentage of accuracy is even higher than the traditional Elliott wave 5-wave patterns that are so often taught. We also introduced last week the 10-year note, the TNX indicator. And we talked about, let me condense this chart here. We'll put the Elliott wave on here as well. And you can see we have a wave 3 high to the upside. And we talked about this resistance level right here and noted that we had some consolidation right above that level. We broke above it. That was long-term resistance going all the way back to 2016. And we noted that that was another indicator, and likely the final nail in the coffin for this vertical rally would be if interest rates continued to go up, and they did. So we broke above long-term resistance. We consolidated. This is all just standard technical analysis, as standard as it gets, and then we broke vertically to the upside. So we're in a very strong wave 3, but again, it's a vertical wave 3. So at some point in time, that will relax as well. Interest rates aren't going to go straight up forever. We'll watch to see how this plays out. And we also had a target, as we talked about, of 32 in last week's recording. Again, I don't want to rehash what we talk about too much in previous recordings. Go watch those, and we'll see. Does that reach the 32 level on this wave 3, or do we correct back into a wave 4, and then we move up towards that level on the wave 5 extension? But 32 is somewhere around in 32 is the area that we are looking for this TNX, and that's a bit higher from here, as you can tell. So higher interest rates from here are going to be problematic for the equities market. And we also talked about last week that rising interest rates are the worst thing for equity markets. You can talk about all the other things that are going on, and we certainly have with our recordings, but the worst thing for an equity market is a period of rising interest rates. And so even though historically rates are still low, they're climbing, and the market always looks ahead to see what's happening down the road. So I wanted to share that with you. So far, pretty much everything that we've highlighted is finally starting to come to fruition. So let's look up, before we go at the charts, let's talk about some of the economic indicators. Believe it or not, playing into the sentiment side of things, the bulls and bears, actually the bulls went back to the upside up to 66, and the bears went down from 12.8 to 12.6. So why? Because up to this point we've been conditioned to do what? Buy the dips, right? I mean, in this rally, every time the market is sold off, there's been a big rally to follow. So that kind of psychology gets into people's psyche, and that's what ends up happening. And so far, nobody's worried from the investment advisor universe, at least, as not only did the bulls go up, the bears went down, the spread widened once again. We had a pretty decent jobs report on Friday, but that was completely overshadowed when interest rates took off, and you can see this big move to the upside that we had on interest rates on Friday. Work week went down. Now, there was some chatter on the financial networks about an historical number that when you see a market rally but the work week starts to go down, that is a contrarian indicator of the market going back to the downside. But I don't know that we can put it on that yet. And a lot of people were also blaming this thing that we had called a bomb cyclone, which was the horrible weather that we had up in the northeastern part of the United States, and that made the work week, it made it hours go down because people couldn't get to work, and there is some validity to that. So we'll just watch that over the next couple of weeks and see how that plays out. Again, on the mixed bag, durable goods moved to the upside to 2.8, but there was a lot of aircraft orders placed with Boeing. So remember, transportation is included in there, and that sometimes makes that number a bit skewed. And business inventories went down. The expectation was for a rise, but they actually dropped 0.6%, and that's on top of a drop of 0.3 in November. So why isn't business investment increasing with the tax cuts and the relaxed regulations that business leaders have all been touting that they really like, and it's making it easier to do business. It could just be a lagging indicator and it hasn't caught up yet, and we'll just have to wait and see how that plays out. But at this point in time, just things to watch, that the economic data has been a little bit of a mixed bag. Now, looking at our charts with our butterfly on MO, notice how strong this wave 4 is staying here. Even with a huge down day on Friday, we didn't get much of a move lower here on this, and the wave 4 is still intact, which means that our potential move up here to the wave 5 high is still intact, and we don't even need it to go anywhere near that high to reach our butterfly target. Why? Because when we first talked about these, they are defensive stocks. Remember, Altria or Mo is basically tobacco, and the Sen stocks, tobacco, alcohol, and gambling, tend to do well when the market corrects or when the economy weakens a bit, and that's just how it's been for long periods of time. So far, that one's hanging in there just fine. STZ also is hanging in this area. Now remember, we talked about this one as well. We were looking for a continued extension here on the wave 5, but we talked about a couple of other things in the recent reports. One, that we would run into some resistance when we close this gap. Well, we haven't closed the gap quite yet, but we did get pretty close, and we have some resistance here. So far, this area of support is holding. This is also in the alcohol area, the Sen stocks or the defensive stocks that we talked about. And if this holds, then we may go back to the upside. But as we noted, if this area is broken, we will close out our butterfly. The beauty of butterflies, when you're placing them directionally out of the money, very low risk, very small equity commitments. And if you miss one, oh well, that's the way it goes. We're already way ahead of the game with the 250% gain that we had in the Google butterfly. So if this breaks and looks like it wants to come down and close this gap, we'll just close this butterfly or let it expire, depending on what the premium is, and move on. But we also highlighted this CDW, which had so many different Elliott wave patterns, and our target is 78. Look what it did. Pardon me, on Friday, a very decent day, only down 58 cents on Friday, and on Thursday we moved all the way up to a high of 76.51, and if you go back and look at, again, the past recordings, our target is 78. We are almost there. And we highlighted the increased probabilities when you have more than one Elliott wave pattern giving you the exact same target. That's a pretty amazing chart considering how weak the market was throughout the entire week. Stayed very strong, actually moved up on Thursday, and just a tiny bit moved to the downside on Friday when we were dealing with such a massive move lower in the equity markets. So again, the power of Elliott wave and understanding it, the value of the education in this, in my opinion, is priceless when it comes to your account and building your retirement money or money that you're living on, regardless of what your motivation is for trading. These tools, Elliott wave, profit source, integrated investor, are crucial to long-term success because they work. They're proven over time. And I think that anyone that has been watching these recordings over the past several weeks can't do anything but agree that basically the analysis that we have been sharing with you from these indicators has been awfully accurate in the market. So I hope you had a wonderful week. Friday was an interesting day. I hate to say that it was a good day, but when you have this kind of volatility in the markets and you're an options trader, it is a good day, and we did really well. We made a lot of money on Friday, so I feel bad for the people that are in fixed equity investments that didn't have such a good week or a good day on Friday, but that's why you're here. That's why you're listening to this. So let's keep it going. So we'll be back to talk to you again next week. Next week sure will be interesting based on what happened on Friday. Take care, everybody.